When Donald Trump won November's election, financial markets seemed almost as pleased as his supporters. Anticipating a Wall Street-friendly administration, a Trump bump sent the S&P 500 up 2.5% after polling day, a rally that continued right through to mid-February in a peak of 6.3% higher. But since then, uncertainty about his economic plans, specifically the cost of those tariffs, have caused a Trump slump, with all the gains since election day handed back. Now, that slump has accelerated in this last week of unpredictability. On Monday, Trump confirmed that tariffs against China, Mexico and Canada would be implemented. The market fell. On Tuesday, the tariffs began. Trump warned of a little disturbance in his address to Congress. But on Wednesday, he paused the tariffs after the car industry lobbied him to hold back. But a day later, facing threats of retaliation, he paused the levies on Canada and Mexico entirely for a month. All bumps in the road, but in the same direction, down. And that's because the tariffs are costly and disruptive and aimed at America's three biggest trading partners. Mexico has a total of $840 billion of goods traded with the US, Canada $761 billion, and China $582 billion. Now, these are total imports and exports, but the US has trade deficits with all three. That means it imports more than it exports, and it is that which irks Donald Trump, who believes it is fundamentally unfair.
This has been very unfair. Our country, from an economic standpoint, a financial standpoint, and a trade standpoint, has been absolutely ripped off by almost every country in the world. Canada, Mexico, and then you just go right down the line.
Now, if these tariffs were to be sustained, they would come at a price for consumers. This chart shows market expectations for inflation in the US, and you can see it's rising. Now, if we add a line for Europe, we can see the gap between the two has widened. In fact, it's at its largest in 3 years. And anecdotally, US businesses, including the retail giant Target, are warning of price rises. And there are also some early indications that growth may be slowing. This is from the Atlanta Federal Reserve. It's their best assessment of the economy today. And it suggests the economy is actually in reverse, shrinking by minus 2.4%. Now, these are not official national figures, but they indicate the jeopardy here for Donald Trump, because he promised the precise opposite. Now, Donald Trump has a mandate for tariffs, and for now, he might be using them primarily for political leverage. But if this market downturn lasts and his popularity suffers, we'll find out just how beautiful he thinks tariffs really are.